one.
My name is Nick. I'm a full-time trader and entrepreneur. We put out tons of stuff for free for traders.
These are real trades. This is real money. I'm putting my money on the line.
This is going to be a live trading video.
Here, locking in over $1,000 on this trade.
Wow, I'd love to get in on this.
Technical insights that really look good to me.
There we go. We're live.
Good morning, guys. Welcome back to another live stream. Thank you so much for being here. We've got some people in the chat already that I noticed were here early, so thank you very much for showing up. We're back on the charts doing some more technical and fundamental analysis of things that are going on in the world right now, which there seems to be a lot going on in the world. We're seeing the stock market. What's the stock market doing today? Real quick, S&P 500 sort of trying to rebound here a little bit. But if we look at the daily chart, you can see the the S&P has actually taken a bit of a dip here. We've seen that high back in late September, earlier on in September. Now here in late September, we are seeing a pretty good little move to the downside on the S&P 500. However, to be fair, this candle here today looks like it is a little bit telling as to where market participants are trying to try and push this thing back up. So if you're looking at the U.S. indices, for example, S&P 500, or you're looking at US 30 or NAS 100, whatever you're looking at, you're probably seeing a little bit of a boost here today. NAS 100, for example, also seeing a similar sort of topic, NAS, or a similar sort of price action point. So this is the another version of the stock market, or the U.S. stock market's another indice. And so what we can see here is that we had this supportive level right there at 14,860 or so, and then price basically popped underneath there. But today, again, we're seeing a little bit of a rejection candle there coming in here on Friday. And sometimes you get this on a Friday. You get, probably some short sellers who've been holding their positions, and maybe they don't want to hold that over the weekend, so they might be closing out. You may see a bit of a bounce here off of the S&P 500, the NASDAQ, etc. So we'll have to watch that, keep an eye on that. The last one I want to look at is, of course, US 30. So US 30 is the final US indice I'll take a look at today. And I don't spend a tremendous amount of time on the US 30 or NASDAQ 100 or S&P 500 usually. But again, when they start to dip, it can really push over into the currency market as well. And the reason for that is because, if you're trading, for example, the Australian dollar, right? The Australian dollar, if you look at their economy is very based in trade and very impacted by the global economy, right? So, for example, when this thing is coming down, the S&P 500 is coming down, a lot of times you do see a bit of correlation there with the Aussie currency, right? Because, again, their economy will suffer quite tremendously if the worldwide sort of outlook becomes negative. So whenever we see this happen, usually we see things like Aussie, things like NZD, stuff like that tends to get a bit weak. So when we look at this again today, seeing a bit of a rejection here may also be a signal for things like the Australian dollar, maybe the pound dollar. And we'll go take a look at those things here today because I think that they are moving already. So stay tuned with me on that. Now we'll switch over to DXY, which is sort of the focus of today's video. DXY is, of course, the US dollar index, which has been on fire recently. We've seen this thing absolutely run to the upside very, very strongly. And if we scroll out here a bit, you can actually see we are at or near yearly highs. We crossed over that 94 mark, which for me was a target, several months ago. I thought that, if the dollar was going to get strong again, it would probably need to break out of the recent high and make a stab at 94. We are actually sitting at 94 as we speak. So I guess the question of the day, is it time to buy the dollar, to short the dollar? What's the move for the US dollar here today, which of course is one of the most heavily traded, actually, I think it is the most heavily traded asset in the world, is the US dollar. The most volume per day goes through the dollar. So with this thing making new highs, it's a big deal for the currency market. Whether you're looking at the Aussie dollar, the pound dollar, etc., they're probably all moving. So let's do a little bit of markup here on the DXY. We'll switch to the 4-hour view and see if there's anything of interest here on this this market here. So you do sort of have this upward trajectory, right? You've got this nice trend line here on the lower time frames. It does truthfully look like the dollar may have some support here at that trend line, that 38.2% retracement. But again, it's a little bit of uncharted territory, because if you extend this out here, what we're looking at a scenario in which the previous high has been broken, right? So we are sort of in fresh territory. We're figuring things out up here on the dollar. So as this thing pulls back, the question is, okay, well, is it time to go long? Well, it depends. It depends how fundamentally bullish you are. So for me, I would say actually there might be some good setups on the dollar, and this may be the pullback that I'm looking for. So this 38.2, if it comes back into play, the 50% and the 61.8, they may all offer some unique scenarios to pick up the dollar. Now, obviously, if we're going to be trading the dollar, though, we're not going to be trading the DXY. I mean, maybe some brokers offer that, but for the most part, I'm looking more at things like the euro dollar, the dollar Swiss, the dollar yen. Those are some of my hot on my watch list currency pairs right now. So we will go take a look at some of those. But again, the dollar is pulling back, and I think it has potential to maybe find some support here around that 38.2. The psychological level of 94, right, is a big spot, and you sort of have this upwards trajectory. So I would say price action for the dollar looks bullish for the time being, and until further notice, I am looking at it with a bullish perspective. So I don't know. What do you guys think? Let's see what some of the people are saying. 38.2 fib level is the sign of a healthy pullback. Very well could be something of promise there. Logan, Fed said no rate hikes until 2024 or 22. Is that right? Do we get something further from the Fed today? That is an interesting. Actually, let's see if there's anything on the front page here. It is the 1st of October today. Happy new month, by the way. We do have. So we have, okay, 8:30, that already happened. So we had some numbers here for core PCE price index month over month. That's the change in price of goods and services purchased by consumers, excluding food and energy. Okay, so some slight numbers there that came out for the dollar that were supposedly positive here. CAD GDP was out this morning, which was actually better than expected. So maybe we'll take a look at some CAD pairs as well. That could be interesting. See if there's anything to check out there. And then, of course, we do have manufacturing PMI at 10 a.m. today. These are news events that could be market moving for those of you guys watching the US dollar. So we'll go back to the chart. Again, I think that the 38.2 is an area of interest. I am still fundamentally bullish on the dollar, both on a momentum perspective from a technical analysis standpoint, and also from just the overall hawkish outlook that the Fed has been having. I could be wrong about that. By the end of the week, or I guess maybe next week, maybe the dollar's way back down here. It's certainly possible. But even if I'm completely wrong, I've talked about this many times on my channel. You know, if I were to take a short, for example, let's say I had this marked up this morning. I like the idea of a pullback there on the euro, right? Maybe we draw fibs here. Maybe that 61.8, right? Let's say next week we come back to the charts and we're saying, okay, prices continue to float higher, and maybe there's an opportunity to look for short setups on the on the euro against the dollar. And let's say I take that trade, and let's say I am completely dead nuts wrong, right? Just completely off on my euro short idea. In that case, my goal is to just get out with as minimal damage as possible. Sometimes, you guys, I get comments, as a YouTuber does, right? I get comments that on my channel that are like, Nick, you thought the dollar was bullish, and look at it now. You're a clown. You're a dummy, right? I've literally gotten those messages for 2 years straight, since that's what I'm going to get when I'm a YouTuber, right? As a YouTuber, you don't get to pick who watches your videos, and of course, there are some people who are they're just angry out there. So anyways, I get those comments all the time. Nick, you're a dummy. You should have known that the dollar was going to be strong. You should have known that the gold market was going to go up, right? All these sort of comments will come in, and I don't say that to complain, because I'm very used to it. I'm not really fazed by those comments at all. But I want to point out that those voices are almost just a projection of what we all hear in our own head. Right? I don't need someone else to comment on my YouTube channel to let me know, oh, Nick, you should have known that. You could have done this. You would have done this, right? Because that doesn't do any of us any good. However, My point with saying that is that let's say I'm completely wrong and I decide to short the Euro USD. I'm going to risk very small, and I'm also going to get out quickly and try and adjust, right? Because I have to, as a trader. There is no way for me to survive as a trader long term by being stubborn and refusing to admit that I'm wrong, because I'm wrong plenty of times. Like, I'll be the first one. I'll be right. I'll be hand in hand with those negative comments and be like, "Yep, you're right. I was wrong." Because the thing is, hindsight's 2020. It's very difficult to be right all the time. And it's very easy to comment about what you should have done afterwards. And that's a dangerous language to have in your own head. Because when you perpetuate that in your own head over and over, you end up changing your strategy, never sticking to something that you've planned on doing, right? You're constantly just chasing your own tail, and it doesn't do you any good. So anyways, let's say I short the euro dollar. I like the setup. It comes there and I decide to short it. And let's say that I'm completely wrong and the euro just really has an incredible October. In that case, I'm not going to get destroyed by the fact that I'm wrong, right? I'm going to take as minimal damage as I possibly can if I'm wrong. If I'm right, though, if the dollar continues to be strong in October and this thing comes crashing down and I sell the Euro USD, I'm going to try and do my best to hold on to that winner and to make it work for me. So my point with saying this is because, again, I get the comments, but you guys have them in your head too. We all hear that voice of you shoulda, coulda, woulda in your trading. And it's really, really dangerous because it really does mess you up sometimes. And this is why so many traders, myself included, struggle with the trading psychology aspect. There's always that voice. Doesn't matter what you do, you will never completely feel 100% about what you're doing, right? Oh, I should have taken a bigger position. Oh, I should have taken a smaller position, right? There's never a way to play it perfect. So you have to get it in your head that you're just not perfect. And the sooner you recognize that I'm not perfect, I make mistakes, and I just need to be very, very careful and manage my risk, you're going to be probably a better off trader. Yeah. Yes, it's very true. Denise put it a good way. There's a lot of nasty people out there, armchair quarterbacks. But the thing is, too, Denise, to add to it, even is I'm not complaining about the comments because, like I said, I'm very used to them. What I'm saying is that even you guys at home who may not have a YouTube channel where you trade and share yourself publicly, you have the voices in your head and you see the comments on the channels, and they might feel like they're attacking you, right? My point with saying that is not to just, woe is me. My point is to show you guys that we all have those voices, and you have to sort of get a grip over them. Otherwise, you'll really never make it as a trader. Nick, I've seen videos of your live trades when you trailed your stop. Why didn't you also take partial profit? Because that's not part of my strategy. I don't like to use partial profits. It's not that I don't think you can use them profitably. If they work for you, then hey, do you. But my goal is to trail stops because that's what I've back tested and what works for me. Risk management is so important. It really, really is. Good talk, man. We all hear negativity. We really do. And that's the thing. If you can't, learn to control it, it really can overtake you. Trust me, I've been doing this for years and years now. Trading has been, it's pretty much become my career is studying markets, sharing content about markets, public speaking, all this stuff. This is my world. And I can tell you that after talking and working with thousands and thousands of traders, that is the number one account killer, is the voices in your head of shoulda, coulda, woulda, over leveraging, getting greedy. That's the account killer. It's not the technical strategy that you're missing that's damaging the account. So yeah. What do you think about gold, Nick? Adam, I will get there. I'm sorry, I'm taking time today. It's a Friday. On Fridays, there's less activity for me in the markets. Usually on a Friday, I'm managing my current positions and sort of just setting up for the week ahead. I'm not usually actively, adding on positions or, I'm usually trailing stops. I did take a trade today, which was sort of unique for a Friday for me. But again, I take trades on Fridays, just usually they're lower activity days. Anyways, let's take a look at the GBP USD. This is the currency pair that is probably the most hot topic this week because we saw a major crash to the downside there on the pound dollar, but we're seeing a bit of a recovery here. So the dollar is weakening today, and that's sort of been a good little move here for the pound. So for those of you guys watching the pound, we've got some resistance here. Can it hold? That's going to be the question, because now if we draw in our fibs, we have just crossed over the 38.2% retracement, depending on how you draw it. If you draw it from up here, we're just at it. If you draw it from here, which is how I personally draw it, somewhere in this area, with my fibs, I don't think that there's a perfect way to draw fibs. And let me show you something really cool, guys. A lot of times people are like, fibs are stupid, fibs don't work. And I mean, nothing works in isolation perfectly every time, right? But let me show you something kind of cool. Here is 3 different fibs drawn on the pound against the dollar. I would say that all of these are reasonable drawings of your Fibonacci retracement. And check this out. This is kind of cool. Using our fibs here, we drew from this high to the low, this high to the low, and this high to the low. And what we got is a nice little interesting clutter of levels of resistance. And this, you guys, right here, this is an important little Friday lesson for you. This is why technical analysis is not bank on perfect every time. Because one person, can I ask you guys to do me a favor? Let's do a little experiment here on Friday. It's fun. Why not? Let me get your help on this. Which fib are you drawn? 1, 2, or 3? And ignore which one I said, because I don't want you to just say what I said. I want you to say which fib you would draw and which fib looks cleanest to you. Are you drawing fib number 1, fib number 2, or fib number 3? Because this is, I want to make a point with this, and I'm curious what you guys have to say. Okay, so a lot of people saying 1. All right, 1 and 3. 3, 2, 1, 3. So my point here is the thing is, I don't think that any of these are really wrong. And that's kind of the point, you guys. So people will get all up in arms about the best way to do certain technical analysis and how to do your charting. And if you don't do it like me, you're a dummy, right? That's so many human beings in general, right? If it's not their way, you're just an idiot and you're a bigot and you're ignorant. And we already know how divisive the whole world is right now. It's like, if you don't think the same way as me, then you're just dumb, right? And I think if one thing trading has really taught me to be a little bit, you almost have to be a bit more open-minded than that, because the world, there are so many different perspectives. So thank you guys in the comments. Appreciate you for helping me out with this experiment. So I wanted to point out, you've got Martins who says 3, you've got Majid who says 1, Amir says 2. You have all these people who are seeing the chart just slightly different. And this is the thing, right? I'm not going to say that any of you guys are wrong. I'm going to say that you just see it a little bit differently, and that's okay. Because still, the point is, we can all 3, let's say 3 of us drew it completely differently. We still have sort of a cluster here. And this is why I think it's important to sort of consider that, okay, support, resistance, fib levels, trend lines, it's not a pinpoint perfect spot. It's more of a zone. So let's say we decided that we wanted to look at this thing from a 61.8% retracement. I like that. I think that's a reasonable area. I'm just going to assume that you agree with me, which is dangerous these days. As you guys know, you can't possibly assume that. 61.8, right? If price comes up to this area, check out this zone. This is more of a zone. And this is why when I look at a fib, I'm not looking at like, it has to go down in the next 3 pips. Otherwise, I'm going to stop out. I'm saying, okay, this zone is where I'd be interested in maybe looking at a short, right? If it comes down, great. But I don't want to put my stop loss incredibly tight because, there's a cluster of interest here. So maybe I put a stop loss more like here, right? Maybe I risk a bit more. Let's say I use this middle one, right? And that in that case is risking 50 pips to the upside if price goes against me, something like that. Very, very reasonable as a swing trader. Maybe not if you're a day trader, but for me as a swing trader, that's very reasonable. So, my point here is that technical analysis is not perfect. There is nothing that is so easy like that to just make us all millionaires. It would be great, but you know how it is. It's trading is hard. So I would encourage you to think of these areas more as like zones, not as, draw. Maybe it may even be helpful to some of you guys out there to draw your fibs in multiple ways, right? Draw 2 or 3 fibs and say, hey, you know what? Different people are going to see this differently. Let me just treat this as an area and be a little bit more conservative with a stop loss. That's my opinion. Of course, some of you guys might disagree. Some of you guys might be, Nick, you're a dummy if you don't use this fib, because that's the proper fib. And my mentor told me that if you don't trade exactly like me, you're a dummy. And yeah, you know what? If it works for you, do you. I'm not here to tell you not to do it. I'm just telling you to, be a little bit open to the idea that people see charts differently. And there are many traders who are successful at trading that do things differently. So if that doesn't tell you anything, it should, right? Because there are people who look at these charts differently and still make money, right? They make their money, they do their thing, but they look at it differently. So keep that mind open when it comes to technicals. We had a good conversation yesterday in our community, a nice healthy conversation. I'm not going to say debate, though they wanted to call it a debate, on whether or not support and resistance or supply and demand exists in Forex. And hey, you know what? It's Friday. We're going to do more experiments. Can I ask you guys to let me know in the chat, yes or no? Do you think that supply and demand exists in currency trading, right? Do you think that supply and demand, right? For example, I'm talking about, that would be a supply zone, quote unquote, or this would be a demand zone. Do you believe that there is such thing as supply and demand in Forex trading? Yes or no? Because there are people on both sides of this camp. This is another divisive, or not divisive, but a conversation that traders believe one way or the other, and some people believe very, very strongly. So here's dollar yen today. So I think most people would agree yes. Most people are on a side of yes, right? Well, and to your point, pool side, it's just support and resistance. Keep things simple. It's the best thing to do. Well, and there are some people who that's the thing. Some people are like, support and resistance doesn't work, right? There are people who believe different things that look at things differently. And hey, you know what? If you make money doing your thing, that's what I'm saying. Just do your thing. I'm not here to tell you one way or the other. But yeah, supply and demand in Forex, I think it is a thing. I think it is very realistic, because the way we discussed it was currencies, do they have an inherent value? So again, I'm sorry for the if you're here just for analysis, I'm sorry, because I'm kind of going off on a tangent. Stocks, gold, oil, they have like finite real world supplies, right? Currencies get printed. So the problem is, to be fair to the argument of no, there's no such thing, the change in the amount of volume of currency out there does sort of change the supply of it, right? I guess actually, you know what? That sort of even answers the question of whether or not there's supply and demand, because there is a certain supply out there. It's just changing. Unlike gold, to be fair, which there's only so many, I don't know, pieces of gold coins, or a rare gold coin, right? There's only so many of them. So that kind of creates a supply and demand for it. But anyways, I believe it to be very effective in terms of, for example, what we could say is that, let's say that this certain area, right, when price was, let me actually make this point here. So let me draw in a level here. So I could make the point here and say this area, in hindsight, of course, right? In hindsight, we know that there was a big buyer down in this low. And then when price came back down, maybe that same buyer said, hey, let's pick up some more, pick up some more. And then the rally came, right? So I would say that this area we would call an area of demand, because you do have lots and lots of buy orders flying in to the dollar yen. And that might be a big bank. It might be a big institutional trader who has his eyes on, or her eyes on, picking up dollar yen longs, right? Maybe they're filling it for a client. Maybe they work at a big bank and their client wants to buy, so-and-so number of dollars or whatever, right? or exchange from yen to dollars. And that's how the currency market works, right? That's the sort of the foundation of it, is big banks are moving tons of money for their clients. And not all of it is speculative. A lot of people think that the currency market, they may be newer to this stuff, and they think if you're trading the currency market, everybody who's in here is just trying to make a prediction about where price is going. But that's not actually the case. There's a lot of, actually majority of the money flow in the currency market is just businesses exchanging money back and forth, right? And banks sort of needing to fill those orders for their clients. So, it causes all sorts of volatility and can cause massive flows of demand one way or the other. Stimulus is pumping money into the economy. Tapering is slowdown of the stimulus. Yep, which is a big conversation right now for sure. Supply and demand works. Retail traders provide momentum. Big moves made by big bulls with patterns. That's why the dollar is going to zero over time, I guess. Yeah. Well, most of the fiat currencies over time will devalue, as they have been doing for a very, very long time, right? When you print money, over time it goes down, but there is a healthy level of inflation, right? The Fed wants, their target is 2% a year, right? 2% inflation per year. So yes, the dollar will continue to, if things go their way, continue to go down and down and down, but at a steady, healthy rate. It's, natural level of inflation is fine to banks. It can encourage a nice, healthy economy, which is good for people. Bigger fear is really high inflation. That's scary, because then you're looking at the price of goods and things for the average citizen to be really dangerous. So anyways, looking at the dollar yen, I don't love that there's not a ton of structure here at this 38.2, but if you're super bullish on the dollar, maybe there's something there. We'll switch over to gold now, taking a look at XAU USD. And like I said, we've been all over the place ranting today. So sorry to those of you guys who are just looking for analysis. This is, we'll definitely be back to normal on Monday. But again, just lots of ideas and lots of stuff to talk about. So thank you guys for hanging out, by the way. Appreciate you guys on a Friday, spending some time with me, looking at the charts, looking at, technicals and fundamentals. And I know that there's a lot of you guys out there who I can see your names, D, Brandon, Denise, Logan. There's lots of you guys who show up all the time. And I know that you have an interest in this stuff just like I do. So I don't really mind just chatting it up with you guys about this stuff, because like I said, it's my world. And for you guys, I'm sure a lot of you guys are in the same boat. You really love this stuff. It's interesting. Looking at gold here. Let's think about this with gold. So gold put in that low at 1724, which is a big move, by the way. That's a big, a really impressive move there to the downside for the bears. Now we've sort of slowed down on this downward pressure. You can actually see gold popped really, really strong to the upside, and now has consolidated a little bit. I wouldn't be surprised to see gold make more of a push to the upside now. I said yesterday that I think that the path of least resistance was to the downside. I didn't have any interest in shorting gold, but I basically said that this trend line, I would expect it to hold. It didn't. It actually broke through that trend line. So now we're seeing it retest here. So I would say now that if the dollar comes down further, right, then gold, maybe in the next week or so could make a move back up, make a recovery. We'll have to see if that's the case. I'm still not like bullish on gold. I'm just saying that, we've seen a really nice move to the downside. And maybe we see a bit more of a pullback coming. We've seen these little, impulsive moves, corrective moves, impulsive moves, corrective moves, impulsive move, corrective move. But now, is the question, can we get that sort of break further for a bigger pullback, which is very, very normal, even in the context of a strong downward trend, right? So again, big push to the downside here. Maybe we're seeing a bigger impulsive move, corrective move, impulsive move. Maybe, I mentioned this the other day. I think it's very possible that we could see a push back down to the lows if the dollar remains strong, which I think it will be. That's my opinion. Like I said, I'm very capable of being wrong, but I think that the dollar should the Fed continue to stay on this path of moving towards possible rate hikes and tightening of monetary policy and combating inflation. It sounds like their agenda is, to do those things. And so that could lead to more dollar strength and honestly, more weakness for gold, more weakness for the stock market, things like that. So we'll we'll have to keep tabs on that. But like I said, if you're bullish on gold, maybe there's a short-term run up back to this here level. We're looking at the 1 hour chart here, and it truthfully does look like maybe a little bit of a bull flag here. I think someone pointed that out earlier. So if I saw your comment, I thought I saw something like that. If I didn't credit you, I'm sorry, but I think someone said that. But yeah, maybe a nice retracement there to 1780. That could be a pullback spot for the bears longer term, and short term, maybe there's action for the bulls. Maybe we see a little bit more of a follow through after that big spike there. So yeah, could be waiting on NFP next Friday. Denise, that's a good point. Appreciate that, Nick. You're like my mentor. Most of my strategy comes from you, and I also learn fundamentals from you. Brandon, I appreciate that, man. I would hope though that you take my channel as like a brainstorming board. That would be the ultimate flex for me, would be if I knew that people use my channel not to just look for like answers or shortcuts, but rather to, hey, he said something about this. Let me go test that, apply it myself, test it on a demo account. Like that would make my day, because if I knew people were just, and I know there's a lot of people who do that. So that already does, that's why I do this on YouTube, is I obviously I make money from YouTube as well, but I am really happy. I'm really, the fulfillment is knowing that there's people out there who love this stuff too. We're not here talking about, like, you won't see, super fancy mansions, Lambos, all that stuff. Like, that's not what we're here to do. We're here to actually talk about trading and to share this passion for markets, which is so cool that I get to do that with you guys every day. So, there's a little like and subscribe button there. If you haven't hit those, that would be super appreciated. I hope you guys enjoyed today's stream on Friday. We had a lot of fun just talking about markets, talking about setups, and also just sharing some back and forth banter. But again, thank you very much for being here. You guys are the absolute best. I appreciate you every day. You guys are awesome. And hey, we will see you back on Sunday for Sunday's video. We do it every Sunday. We go through the markets. And that is all from me, you guys. So I'll shut up. You guys have a great rest of your day. We'll see you back next time.
I know you were expecting Nick, but my name's Julie and I do the real work around here. I wanted to take a second to thank you guys for watching the show and tell you more about some free content that we offer. One of the things that we offer is a free email newsletter. So if you click the link down below, you can sign up for free market analysis, trading tips, and exclusive offers. Every once in a while, someone here at A1 Trading takes a crazy trade and you'll be the first one to know about it. See you guys next time.